Hello everyone, my name is Sudeep Brahmachari. I'm a SEBI registered research analyst. I hold a master's in finance and have been an asset valuation professional for about 7 years of my life. For the past 10 years, I'm an active trader and have been associated with the markets. Now, I know that you must have heard about a lot of strategies, the so-called quote-unquote strategies that work in the market. Now, here in this course, I'm not to sell you with false promises that I have strategies that work 90% of the time. No, they don't. My strategies work with an accuracy of 70 to 75% because I strongly believe that strategies give you a guidance how a proper technical analysis can make you win every day, because every day is different in the market. Now, why we created this course, as this can serve as a foundation for you to start your analyzing journey, where you are graduating from being just listening to someone about what to buy and what to sell, than to do your own analysis. This can be serve as the first guiding principles. And you must know by now that many people sell strategies at exuberant prices, where you see that you buy them and then you feel cheated at the end of the day. They don't work in the real market. And this is why, to solve this problem, we thought that why not we share, because we trust you, why don't we share our strategies? Of course, we'll be hiding the name of the indicators that we are using, but we can always show you how we are using the strategies. You should see for yourself that do we provide what we are claiming to provide, and then you take a decision that you want to buy this or not. You want to go ahead, please go ahead with the full payment, and you can buy the strategies and get all access to our support and indicators that we're using. If you feel that no, this is not working in your favor, I wish you all the best. No hard feelings at all. Thank you. Please enjoy the videos from here and understand the strategies, how we are using them, and I wish you all the best. Thank you. Hello everyone. So thank you for attending the lecture number 1. Today we will be discussing about the second strategy. Okay. Bank Nifty strategy number 2. So this was much requested from all of you, and this is the famous rainbow strategy that we'll be using. Okay, so quickly understand what is happening in this thing. So here we'll be using Zerodha Kite. Use chart IQ. Okay, don't use the trading view chart option. Won't happen there. Fine. In your Zerodha Kite, simply select Bank Nifty futures. Right? Go to chart option. So basically open up the chart. Once the chart open up, select 30 minutes as the time frame. Correct? From your studies, go and select rainbow oscillator. Okay, and also select VWAP. We'll be using these two in parlance. Okay, now let us understand how we are using the strategy. Now remember one thing, in whatever strategy we do, we always have a signal candle and an activation candle which is either the breach of high or breach of low. I hope this much is clear from our first strategy. So whatever we come up with, it will always follow this particular logic. And why? Because if you don't have a signal candle and you don't know the high and lows prior to your entry, you will never be able to take entry. Meaning, if this is a candle and I tell you that when this is forming, take a trade, you will never be able to enter into any point because it is forming right now. So once this is completely formed, you then only know what is the high, what is the low. Once this has completely formed, then you should know if the next candles breach the high or low depending on the situation. That is when we enter. So this is why you always get your entries sorted and entries on time and your stop loss preset. It is never like you set your stop loss on a trailing basis. Anyway, coming to the strategy. See what will happen. So once you open up your chart IQ, you will be able to see candles like this. This is your normal Bank Nifty 30 minutes candles. Okay, this is Bank Nifty futures. Correct? Now, once you have your rainbow oscillator loaded up, you will see the rainbow oscillator looks something like this. There is a mid range, okay, and there are green bars that are different in sizes. It slows, gets smaller. From there starts red bars. Again goes smaller and again starts green or blue bars, however you want to do it. I hope this much is clear. Okay, we'll see it in practical example, then I think it will be more clear. What we do in this strategy is we again, similar to the previous strategy, we wait for color changes. So if there is a blue, we wait for it to become red. If the current candle is having a red mark over there, you wait for another blue. Now, understand the working of the strategy. This particular strategy works in this way. Say, here you have your candles. There is a blue candle like this, and then there is a red candle that forms like this. Okay? You see, and these are 30 minutes. You see, from here, the rainbow was giving you a blue line. In this candle, the rainbow gave you a red line. Okay? So this becomes your signal candle. Now we don't just take a trade if you see a color change. We mix VWAP along with that. So once you load VWAP in your normal settings, you will see there is a line like this that is loaded up on your chart. Okay? Now, if you see that a color change has happened, in this case from blue to red, and the candle has formed above the VWAP, you wait for another candle to form that is closing below the VWAP. So there is a VWAP. Say the next candle starts from here and closes below the VWAP. Okay? And the rainbow is still red. Then we take a short trade at the low of this. The high of that particular candle is your stop loss. The length of this, I hope you understand this from the previous videos. The length of the entire candle is your target 1. Double the length is your target 2. Once you achieve your targets, get out of the trade. Again wait, if the color changes from red to blue to red, wait for it to continue the red, and then again get back to blue. Okay. Now, once this has gone to blue, say the candle forms here. If you are going to take a long trade, you need to wait for the candles to go up and close above. Remember, this is not high, this is close. The body should be above the VWAP, and the rainbow should still be green. Then you take a trade at the high of this. The low of your candle is the stop loss, and you get your targets. We'll look into this in more clarity from our computer, but understand, I'm just trying to, because there are a lot of things, so this is why I'm trying to make a flow chart out of what we are going to do. Okay, so first is color change. Okay, so it should either change from blue to red or red to blue. Number two, from this color change, we should have, if short, if we need to take a short trade, like if the market is going down, close below VWAP. Now please remember, this is close, this is not your low. It might happen that this is your VWAP, the candle goes and tests and then closes above VWAP. Wait for it to close below VWAP. We don't consider low here, please be very careful. Close as in the shaded part should be below VWAP. Okay, if long, close above VWAP. Again, this is close. Once this happens, this becomes your signal condition. Correct? Once this happens, then you wait for activation. High minus low is your stop loss, as in these many points. 1x is your first target, 2x is your second target. I hope this much is clear. Thank you. So as you can see, we have opened up the Zerodha terminal. So the first thing you need to do is, let me open up a new watch list, just a minute. So in a new watch list, first type Bank Nifty futures. So this is December, so we load up the Bank Nifty futures here. Go to add, you'll have your Bank Nifty futures here. Now click on this chart. Once you click on this chart, something like this on your right hand side, the chart would pop up. Now if you cannot see a chart like this, make sure that you have your chart IQ as your charting platform. So go to, in a computer, click on your profile name and go to my profile, and from here just select chart IQ 7. Okay, just select chart IQ 7. Your chart will look like this. Now from here, as you can see, go to your studies, type in rainbow. Once you type in rainbow, you'll find rainbow moving average. We don't do this, we use this rainbow oscillator. Okay, click on the rainbow oscillator. Once you click on the rainbow oscillator, you can see here at the bottom left, can you see rainbow oscillator 210? So this means it has loaded up. You just keep the settings as it is, and then you load VWAP. Just the normal VWAP, not the anchored one. Once you load both of them, you would be able to see a red line, which is the VWAP here, and can you see these bars that are changing color? This is a rainbow oscillator. So, and just to reiterate, these are 30 minutes chart. You can change it from here. So we'll be using 30 minutes here. So see, the first condition is the rainbow should be changing its color. See, from here it was green, changed its color to red here in this particular chart, in this particular candle. See, I'll zoom in and you can see it. Change its color from green to red. The moment this happened, we know that this is a signal. Now the sufficient condition was this candle should form below your VWAP. Now see, it started from here, the close was below the VWAP. So we know that both our conditions are fulfilling. So we know that we'll be taking a short trade from here if the low is breached. Now, if you keep your cursor over here, you can see the low is 43712, which is here. Just follow the cursor. You can check it here. The low is 43712. So the color changed here. We know that we'll be taking a short trade from here. See, it activated here at this point, and then the trade is going on. This is in live market. Let's see what happens at the end of it. If you see the previous examples, now see, this is where again a color change happened from red to green, right? Now once this happened, see, this is not a valid signal because the close of this candle is below the VWAP. Because this is below the VWAP, we wait for a close above the VWAP and the color should remain the same. See, happened here, 8:12, 9:15, the color was green, the close was above VWAP. We take a trade at the high of this. See, this is the movement you got. Okay. Now, see, once again, color changed to green here, but the close was not above VWAP, so we don't take this trade. See, here, color changed from green to red, close is below VWAP. We take a trade at the low of this here, easily we got our targets. Color changed here, from here to here, but possibly you won't be able to take this trade because this happened at the end of the day. You would need to close your trade. You need to close your day. This is not like, I won't suggest taking a trade because see, it happened that it went up there, but then this was a continuation of the previous day. Don't trade like these. Okay, this is an interesting day. A lot of things happened. See, here the color was red. We knew that if the market goes down below this point, we will be taking a short trade. Didn't happen. Next candle, the color was green. Again, this is a sufficient condition because the close is above VWAP. Now, the high was not breached. The market turned again. Here, see, this is just a very small candle, just closed below VWAP. Here, see, activated, went out, quickly gave you profits. But then see what happened. Again, color changed here, right? It changed. This is not a valid candle because the close is not above VWAP. It happened here. But see, unfortunately, it activated and then hit your stop loss. This particular trade, okay? This was your stop loss, although you must not have made losses because your targets, the first target that you got from this activated trade must have nullified the stop loss, but then a stop loss is a stop loss. So this is a stop loss that happened here. See, once again, here you get your signal. See, color change from red to green, close is above VWAP, activated in the next candle, went up. So this is a strategy. So rainbow is a strategy that we majorly use for long targets. So you will see this, using this strategy you will easily get like 70-80 points profit or 100 points profit. So this is what we use to, but be very careful with this strategy, because sometimes what will happen that it will activate. See, for here, like here, it activated in the next trade here towards the end of the day, activated, just went down and then went up. So this would have resulted in a stop loss. In this day, you didn't get any trade throughout the day. This is the only trade that you got, and that hit your stop loss. So you need to be careful with this. So we'll put up a full version of the entries and exits that we have got using this strategy throughout the month, and you can check the accuracy of the same. I hope you understood what we are trying to do here. If you have any questions, please feel free to contact us and get your doubts solved. Thank you. Okay, so now that we have understood both the strategies that were given, if you understand, both the strategies were made in Bank Nifty futures, whereas we mostly trade in Bank Nifty options. Okay. Now there is if you understand, in options we have different strike prices, and we have a call option and a put option, right? So how do we analyze option, or how do we trade in options by analyzing futures? That is what we'll learn in this lecture. Okay. Now, say in futures, you get a signal somewhere using any of the strategies. There is a candle with a respective time frame. For if this is the first strategy, this will be a 15-minute candle. If this is the second strategy, it will be a 30-minute candle. If this is a strategy where you got say a short trade here in futures. Now, the moment you get a short trade, which means Bank Nifty future is going to go down. Correct? Always remember this thing. So if Bank Nifty is going up and going down, so there is call option and then there is put option. Okay, this is your Bank Nifty future. If your Bank Nifty future is going up, we buy call option. If your Bank Nifty future is going down, we buy put option. I hope this much is clear. Now, in this example, if Bank Nifty is giving you a short trade or short indication, which means that markets are expected to go down, the moment this happens, you know that you will be buying a put option. Correct? Now, once you know that you will be buying a put option, the question is, what is the strike price that you should be buying? If you understand, in options, how do we trade? It is like something like buy Bank Nifty 40,000 P above a particular price. Now this 40,000 P, we understood that we need to buy P because Bank Nifty future is going down, but how come this 40,000 is coming up, right? So for this, the moment you see that there's a short trade that is coming up, you immediately open the option chains of Bank Nifty. Now this option chain is available both in Zerodha and in NSE's website. I will show you how to load up this option chain. You find out an option that is trading somewhere between 300 to 340 or 50. Don't exceed this range. Now this, if I give you like buy within this range, find out options, this solves a lot of problems. So there are something called option Greeks and there is something known as time decay options. Out of my research, I find that this zone gives you the best strike prices where the time decay is the least. So once again, you see that there is a signal that is coming up in Bank Nifty futures. If this is giving you a short trade, you know that you will be buying a put option. The moment you know you need to buy a put option, you open your Bank Nifty option chain and you try to find out options that are trading between 300 to 340. You say you will find like 40,000, 40,100. You will find 2-3 options that are trading between this range. Mostly you will find 2-3 options. Now this is up to you, depending on your capital, which one you want to trade. Like either 40,000 or 40,100. I will give you the logic. Okay, you can trade whichever you want. Now, you load up either of this option in your watch list. So now say you have 40,000 PE, Bank Nifty 40,000 PE. As you have opened the chart of futures, you can open the chart of options. Okay? Now, your option chart will look almost similar to how your future chart looks like. Now this is 40,000 PE. This is a 40,000 PE. This time frame, if the time frame is X, here also the time frame should be X. If this is 30 minutes, this should also be 30 minutes. Okay? Now, notice what your signal candle time is. Say this thing comes up at 11:30. So vis-a-vis this, you will have a candle in option chart that is corresponding to 11:30. Okay? Now remember, here we will only buy, we cannot sell because it will take a lot of money to sell. So if you get a short trade in your futures, you know you need to buy your P, right? So if the low of futures is breached here, the high of your option will also get breached here. If you do not understand this thing, take a moment to pause and reflect on what I said. If you need, you please go and rewind and understand this once again. If this is a short trade where Bank Nifty futures will go down, in options, this is a put option, the put option will go up, right? So the low of this equals the high of your option chart. Contrary to this, if this was giving you a long trade, here you know you need to buy C. So in this case, we'll be loading up a CE chart, whatever strike price, depending on this logic. Again, we would see there is a candle that has been made with the same properties of this candle. Again, if the high is breached, because in CE we are taking a long trade, this is pretty intuitive. But this is why I wanted to give you the first example with a P, because in P the futures will go down. However, we need to buy an option that will go up. So this is a bit counterintuitive, and this is why please take some time to understand this thing properly. Now, what is the entry? Similar to what we have learned in futures, in option also you will have a signal candle, right? The high of this, say the high of this is 350. So now this Bank Nifty 40,000 P above 350, that is your entry. So see, now you will always get your entries, you will know your entries prior to the price. So it will never happen that the price, your entry is at 350, whereas you are taking an entry at 370. So this is why we have always been successful in giving entries prior to the actual price hitting. Okay? Now, from here, what is your stop loss? The low of this candle is your stop loss. Okay? What is your target? The length of this. Okay? Now, having said everything, understand one thing: options are the most complicated financial products ever created. Now, One word of caution, there is a very high probability, and you will see this in your trading career also, that there is a future chart and there is an option chart. Okay, in your future chart it gives you a signal here, then the market stays flat for some time, then gives you a momentum. In your future it will hit targets. However, in such a case you will see that your option has hit stop loss. This is because options have an inherent tendency to go towards zero. That's a discussion for another day, but just understand options are very, very tricky. My word of caution for you for initial days would definitely be, if you are getting profits in options, it is very important that you accumulate those profits. A good rule of thumb is, for Bank Nifty at least, with a range of this 300 to 350, a good rule of thumb is you keep booking profits at 20 to 30. This is your first bucket where you book your profits. 40 to 50. This is the second bucket where you book your profits. And then 80 plus. 80 to 100 basically. Now, I will also touch base on, so because I gave you 3 buckets, which one would you choose? If your capital right now, see, it all depends on how much you may afford to lose. If your capital is within 20k, less than 20k, I would suggest, because see, there might be a possibility this low is coming up to somewhere, say 70 points, 50 points, or even 100 points, depending on the candle. Okay, you need to find out ways where your stop loss is within 40 points only. Because if your capital is less than 20k, one stop loss equals almost $1,000, which is like 5% of your capital. You cannot do that. So if your capital is within 20k, you should be very cautious that most days try to keep booking your profits within this zone. Once your capital is above 50k or at least around 50k, then you trade 2 lots of options. One lot you book in the first bucket. The second lot you book here. It is only when your capital is above 1 lakh, you buy 3 to 4 lots. You book 1 lot here. If you are, so assuming you have 4 lots, okay? You book 1 lot here. You book 2 lots here. And you book the 3rd lot here. So this is the logic how we trade in options. I know there is a concept of risk reward. I know everything. But if you are in the market, if you are taking a trade, you will see your futures are hitting target, your options are not hitting targets. And this is the reason, because there is a time decay in options. Market makers are very smart. They will make you fall prey to the lure that the market is going to give you quick returns, and this is where you will exactly be trapped. So depending on your capital, don't greed much. Take your profits out first. It is always good to stay profitable than to end your day in losses. We'll go to our computer and see some live examples. I hope you have understood this thing. If you have any further questions, please feel free to reach out to us. Thank you. So we'll understand how we are using the option charts and looking into future charts and taking options. Now this is a live example that we are showing you. See, 9:12, on today's date, 12:15, we see that the rainbow oscillator changed its color. Okay, its low was 43712. It changed its color at 12:15. Right, so we know that we need to take a short trade after that. So if we need to take a short trade, we know that we need to buy P. So if we need to buy put options, how do we load up the options thing? What we do in Zerodha, we click on this more, click on option chain. Now this will open up. Now remember, we always use options that has the current expiry as in whatever is the nearest Thursday, we use that date as the current expiry. So the current expiry here comes to around 15 December. Now, for the sake of understanding, understand these are your strike prices. These are calls on the left hand side. You can see call LTP is the call last traded price. On the right hand side, you can see put LTP. According to our strategy, we will be finding out options that are trading between 300 to 350. As of now, you can see 43,700 is trading at 357. But this signal, when you got this signal, this must have been trading way below than this. So as of now, let's just load up 43,800, which is trading at 415 right now, right? So we come here, just type 43,800, click on, see, Bank Nifty 15th December 43,800, just add this chart. See, at 12:15 we got our signal, right? So open up the option chart. Now you can see here, this is a Bank Nifty option chart. This was the candle where you got your entry, got your signal, 12:15. The high of this candle was 381. Okay, so you know that you need to take a trade above 381 if the next candle breaches above 381. The stop loss was 271, almost 110 points. So from here, see, the very next candle, the high was 391. It activated here. The next candle, the high was 406. The next candle, the high was 422. Right now, the high was 427.8. So let's see if it reaches 100 points or not. But I think mostly it would, right? So this is how we load in options. So for a previous example, if you see that on 8/12, which is yesterday morning, there was a signal that we got. You see, signal was here, but then on the next day, the sufficient conditions fulfilled. So we got a signal here and it went up. So we know that if we are getting a green signal, we need to buy call. So again, we open up our option chain, change the date to 15th December, and we see what is the current options. So let's just load up something because we need to go to yesterday's price. So as of now, trading at say 260, so 43,500, see, 15th December. Again, you open your chart, so go to yesterday, see, at the very beginning it was at 244. This is just an example. You will be trading options that are trading between 300 to 350. Don't look for options that are trading between 200 or 250 or this range. Most of the days you will end up in losses only. So here, see, it gave you a signal that the entry is above 243. The low was 195. So this was having a stop loss of about 50 points. So you can see in the very next candle you got your targets. Went like very fast. So I hope you understand the option part. If you don't have zero, and this is not just for the second strategy, we use the same logic for the first strategy also. We look and analyze in futures and then we take trade in options. So this is how we trade in options. Just rewind and understand the video. I know this is a lot to grasp as of now, but just a quick update. So you can see that our entry was around 383. Right now the market is at 454, 461, so almost 80 points achieved. So as I told you, this is a strategy that gives you like very high returns, and very quickly it gives you returns because it's purely backed by a lot of logic. That's how we have devised this thing. So just a live trade in front of you. Anyway, so this is how we trade in options, and I know it's a lot to grasp. Just look into this video for some time and you will understand what is happening, and you can see, because most of us are option traders and we need to learn how to trade in options. And both of the strategies, we analyze futures and trade options. Thank you.